Most people hear about stocks all the time, on the news, on social media, from friends, but very few actually understand what they are. And here's the problem. If you don't understand what you're investing in, you'll either avoid it completely or make bad decisions with your money. So let's simplify it. A stock represents ownership in a company. That means when you buy a stock, you are not just putting money somewhere, you are actually buying a small piece of a business. Now, here's where it gets interesting. If that company grows, makes more money, and becomes more valuable, your piece of that company also becomes more valuable. This is one of the main ways people build wealth over time. But that's not the only way stocks make money. There are two primary ways investors earn from stocks. The first is price appreciation. This happens when the stock increases in value after you buy it. The second is dividends. Some companies share a portion of their profits with investors, paying them regularly just for holding the stock. Now, here's where most beginners get confused. They think they need to pick the perfect stock to succeed. But in reality, even professional investors struggle to consistently pick winning stocks. So what's the alternative? This is where ETFs come in. An ETF, or Exchange Traded Fund, is simply a collection of multiple stocks bundled into one investment. Instead of putting all your money into one company, you spread it across many. For example, one ETF can include dozens or even hundreds of companies. Now think about what that does. If one company performs poorly, it doesn't destroy your entire investment because you're diversified. This is why ETFs are often considered one of the easiest and safest ways for beginners to start investing. But here's something important to understand. Even though ETFs reduce risk, they do not eliminate it. The market still goes up and down. There will be times when your investment decreases in value. And this is where many people panic and make the biggest mistake. They sell too early. The key to investing is not just choosing the right assets, but also having the discipline to stay consistent. Because over time, markets have historically trended upward despite short-term fluctuations. So instead of focusing on quick wins, successful investors focus on long-term growth. They invest consistently, stay diversified, and avoid emotional decisions. And that's the real difference between people who build wealth in the market and those who don't. But how do you start this journey towards understanding and investing wisely? The first step is to educate yourself. Investing isn't just about numbers. It's about making informed decisions based on your financial goals and risk tolerance. Take time to read books, follow financial news, and utilize online resources aimed at novice investors. Learning to evaluate companies, their performance, and market trends will give you the foundation you need to grow more comfortable with investing. Remember, knowing the basics can empower you, transforming what might seem like a daunting process into a manageable and even enjoyable activity. As you dive deeper into your investment journey, consider setting clear financial objectives. Define what you're investing for: retirement, buying a home, or funding education, and determine your time horizon. This clarity will guide your choices and help you stay focused on long-term gains rather than short-term market noise. Additionally, understanding your risk tolerance will influence not just your stock selections, but also the types of ETFs you might consider for diversification. Balancing these factors will place you in a better position to navigate the financial landscape confidently. As you craft your investment strategy, remember that patience is crucial. Rushing into investments, driven by fear or hype, often leads to poor outcomes. Instead, approach the market with a long-term perspective. Recognize that building wealth takes time and perseverance. Embrace the idea that the journey of investing is ongoing, where learning from both successes and mistakes will contribute to your growth as an investor. Lastly, seek out a community of like-minded individuals or professionals who can offer support, insights, and shared experiences. Surrounding yourself with knowledgeable voices will help you stay grounded and inspired on your financial journey. As you venture further into investing, it's essential to keep an eye on your portfolio's performance. Regularly reviewing your investments allows you to assess whether they align with your financial objectives. This practice will not only help you remain informed about market conditions, but also enable you to make adjustments as necessary. Staying engaged with your investments fosters accountability and ensures that you're actively participating in your financial future. Furthermore, Adopting a habit of journaling your investment decisions can provide clarity and a deeper understanding of your financial journey. This reflection can reveal patterns in your decision-making process and help you learn from both favorable and unfavorable outcomes. Ultimately, investing is a continuous learning experience that thrives on ongoing education, intentionality, and mindfulness. As you continue to develop your investment skills, remember that risks and rewards go hand in hand. Embrace the volatility of the market as part of the growth process, rather than a reason to shy away from investing. By remaining committed to your strategy and continually educating yourself, you'll cultivate a mindset that not only accepts risk, but also understands its potential to lead to greater returns over time. Building wealth isn't about avoiding mistakes, it's about learning how to navigate them effectively. With diligence and consistent effort, you can transform your aspirations into your financial reality. Investing is a journey of discovery. Ultimately, your success in investing will be defined by your commitment to understanding the landscape and staying engaged with your objectives. Embrace the complexities, learn from each investment, and remember that the key lies in patience and perseverance. By understanding the fundamental principles of investing, you lay the groundwork for a prosperous financial future, where knowledge, consistency, and a long-term outlook serve as your guiding lights along the path to wealth, building success.